Estimated tax payments. Let's talk about these. Now, these are tax payments that normally you may not have to pay. Going to go out on a limb and say you're probably working for an accounting firm, working for a business, and you got a W-2. Now, if that's not you, that's just statistically speaking, most people taking the CPA exam, just normal situations, right? Just working for a company, have a job, and you have income withheld from your paycheck. And that generally works. However, estimated tax payments, this may be if you own a business, you don't have money withheld from your paycheck, you have a lot of tax you're going to end up owing. There's a lot of other instances in which you have to make estimated tax payments. Now, so you could think of withholding as estimated tax payments. I mean, it's kind of the same thing. Estimated taxes are payments made to the IRS during the year, covering anticipated tax liability for that year. Now, you might say, hey, I never thought about this, but what if I set my withholding to 0 and just pay all the tax at the end of the year? Well, you can do that, but you'll actually get slammed with a fee. You'll get slammed because you didn't make the payments as they were due. They're due quarterly. However, for the simplicity of employees, they just collect it each paycheck. But if you wanted to do that, in theory, yeah, you could. I'm not giving you tax advice. I'm definitely not doing that. But you could, on your own, and obviously you'd have to be very precise about this, you could not have anything withheld and just pay your taxes quarterly. You'd have to do a little calculations, make sure you're paying the amount correctly. But hey, based on everything we're seeing here, that would be a correct assumption. Individuals such as self-employed persons, business owners, like obviously no one's going to withhold it for you. You have to do it yourself. Or those with significant income not subject to withholding may need to make estimated tax payments. If you are living off of dividend income, to which I'd say first, I hope you're enjoying your life. Guess what? You're not going to have money withheld. You have to pay your own taxes. Like if you're living off pensions, a lot of times that's not going to be withheld. If you're living off of different benefits, even unemployment compensation, if you're living on that, you can have the government withhold some from there, but also you may not have them do that. So if you don't have anything withheld, you are going to have to make payments on a quarterly basis. Now, taxpayers must make quarterly estimated tax payments if they expect to have a tax liability of $1,000 or more for the year. So you see it's kind of a small margin of error. You're pretty much going to have to pay that out. Tax liability of $1,000. It's pretty easy to get a tax liability of more than $1,000 if you're not making those payments. This requirement is going to be here in place to ensure that taxpayers pay their taxes throughout the year rather than facing a lump sum at the end of the year. Well, it's not here for the benefit of the taxpayer. It's there to make sure the IRS is consistently getting its money, and money is more valuable today than it is tomorrow, the whole net present value concept. To avoid penalties for the underpayment of estimated taxes, the taxpayer's total withholding and estimated tax payments must be equal to or greater than the lesser of, and definitely make sure you're familiar with these, 90% of the tax liability for the current tax year, or 100% of the tax liability for the previous year, 110 if the prior year's AGI is more than $150,000. If a taxpayer's total withholding and estimated tax payments are less than these amounts, you may be subject to a penalty for the underpayment of estimated taxes. I will speak from experience. I accidentally had my withholdings adjusted during one year when I was working, and I was not paying enough. And at the end of the year, yeah, I owed taxes, and okay, I paid them, but I was hit with a penalty because it was over $1,000. So that is why don't mess with your withholding. If it's someone else's fault, maybe you could fight it, but I took the blame for that. It just happens sometimes. You mess up. Life isn't perfect. Pay your fees and just move on. However, if the balance of taxes owed at the end of the year is less than $1,000, you don't have any penalty. I mean, it's like, all right, $500. We're not going to run you over the rails for that. You'll be good to go. Here we got an example here, just pretty much the rules we had. Now we're going to use numbers. We've got a recap here. Estimated taxes are quarterly payments made by the taxpayer who expect to owe $1,000 or more in taxes for the year. In order to avoid these, you have to have withholding or make estimated tax payments. And your withholding does get submitted to the IRS. That's part of your company's job, right? Is they withhold the money from your paycheck and they submit it to the IRS. So now they're not just holding on to it for the whole year. No, they have to remit it to the IRS, just like companies get sales tax. You go to Chipotle, you go to a clothing store, you go somewhere like that, and all that sales tax is collected by the company and then remitted to the government. Likely going to be more state and local government, not federal, but works the same way. Here we've got the taxpayer's tax liability for the previous year is $10,000. The taxpayer's estimated tax liability for the current year, and again, you'd have to do the calculation yourself to figure out what your estimated liability for the current year would be. Now, in order to avoid penalties for the understatement of taxes, the taxpayer's total withholding and estimated payments, so the money going to the government, must be equal to or greater than the lesser of 90% of the tax liability for the current tax year and 100% of the tax liability for the previous tax year. It's a lot safer to go with the previous year because that's one set in stone, right? It's pretty clear. It happened already, whereas estimating for the current year, that's a little more risky. But 90%, somehow you calculated it would be $12,000 for this year. So in this example, the lesser amount is $10,000. So in order to not get slammed with penalties, the taxpayer must ensure that their total withholding and estimated tax payments are equal to or greater than $10,000 in order to avoid any penalty. All right, let's see another one here. Just pretty quick examples, making sure you got this down. Again, nothing too wild, but make sure you're able to answer questions like this. We've got a taxpayer's tax liability for the previous year is 8,000. We've got the estimated tax liability for the current year is 9,500. Now, in order to avoid penalties for the underpayment of estimated taxes, the total withholding and estimated tax payments must be equal to or greater than the lesser of. And again, we've got this here: 90% of the tax liability for the current year, 100% of the tax liability of the previous year. Nice repetition will drill this into your mind so you don't forget it. Make sure you're practicing doing questions, but we got great examples here for you as well. Now, in this example, the lesser amount is $8,000, so the taxpayer must ensure their total withholding and estimated tax payments are greater to or greater than $8,000 to avoid any penalty. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.